Reserve actually hike rates since 1994, quite a steep increase. So to get some reactions in relation to this, we are joined by David Kingo, who is an economist. Thank you so much for joining us on Business Cafe.
Thanks a lot too.
All right, so let's start with what is the latest, the rate hike by the Federal Reserve. What can we expect from, vulnerable economies such as Kenya in relation to this, the impact?
Basically, what is going to happen is that we're going to eat up the capital that we have. And what we mean by capital is that, just to go deep into economics slightly, that production is a factor of the capital that we have. Because what I mean is that for me to be part and parcel of the production in this country, meaning like farming, I need to have some money somewhere where I'll invest in that farming. That's the capital we are talking about. If Federal increases the exchange rate, subsequently the cost of production goes high, including the cost of production of me as a farmer in the village. So it depletes my capital. Once the capital is depleted, we produce at higher cost. So the cost of goods in the market becomes high. So when the cost of goods in the market becomes high, of course, then we go to inflation. And that's why you see the local people talk about, or rather, in general terms, with high prices in the economy, life is so hard, we are not able to afford 1, 2, 3 things. So all that movement trickles to inflation in the country from the local person. Yes.
Right, and we've also seen quite a capital flight when it comes to the Nairobi Securities Exchange. It's now at a 19-year low.
Basically, all that affects, because once you see the investment that people can make in this country. Let me even give you an example of the banking sector that will trade in the NSE. Mostly they get the biggest chunk of the transaction there. So their performance still remains to struggle, and it's expected to struggle. Because when you see at around there, I've seen they increase the CBR rate to 7.5%. Then we want me to borrow, where will I invest? Because once I invest, the market is not there, because the purchasing power of people is getting weakened. So the performance of the financial institutions, including many other institutions, will not be able to perform. So to invest in this economy becomes a challenge. And then the red flags will be capital flight that we're seeing in NSC. Basically, it resorts to that aspect.
Yeah, so we're having investors move money into the US, which is considered sort of a safe haven.
Yes,
I did see the rates, they were quite high immediately after the Fed chair, actually, Jerome Powell, actually made that announcement. And now people are...
Yes, because basically they want to edge on that particular aspect. Because when you even look at the details, we had some cries that we have inadequate dollars in the country, or that is capital flight, money is going out, and where is this money? Because if, for example, the exchange rate is expected to grow, then why don't I push my money outside this country where the inflation is growing so high, then wait once the Kenya shillings in terms of value has deteriorated to that extent, then I'll take advantage to bring my money back and get the value exchange gain. So basically, once the currency, our local currency, deteriorates, and meaning if we exchange at 115 shillings, it goes to 130. That is the deterioration we're talking about. They need to push your dollars away, wait for the exchange to still worsen for the Kenya, toward the Kenyan shilling, and come back and make the margin. So because if I can exchange my dollar at 115 shillings today, why should I exchange? I better put it aside, transact in other countries, transact with the internationals, and wait. When the Kenya shilling is at 130 shillings per dollar, then I bring my money back. So any inflation has a lot of effect to this economy. Yes.
All right. And at the same time, the Treasury did come out very strong yesterday, indicating that they were doing partial subsidies, but now they're saying starting July, you better tighten your belts because we just cannot afford it anymore.
And even what you need to understand, subsidy is not basically, does not literally mean that if fuel prices is supposed to increase by 10 bob, then they are paid 5 bob. So the people then 5 bob is pushed to the market. There are other forms of subsidy. But the government says instead of taxing you a VAT of 16%, we'll tax 5%. So 15 minus 16, this 11% is still subsidy. They can still increase this tax and capture that. So we need to understand that as long as they want to remove these specific subsidies, then we also expect some tax changes. Because they want to increase the amount of tax that they tax on specific items to capture on that particular subsidy that is given in terms of tax, the tax benefit. So then the government is not able to sustain oil prices in this country. Basically, they cannot be able to pay as much as they can to this particular subsidy, because these subsidies they are paying is a contribution of tax that people have paid, that they're able to collect and pay this subsidy. The taxpayer does not have enough money to pay this particular tax. For example, if your purchasing power was 1,000 last year, you could live comfortably with 1,000 perhaps a month or perhaps a week. Today, you're forced to live with 500 for the same duration of period. With 1,000, you are paying higher tax to the government. With 500, you are paying a lower tax to the government because your income has come down, inflation has gone higher. So this money that was being collected to pay this particular subsidy is not there because the purchasing power of individuals in the economy has gone down. That's why the government cannot literally sustain. But now what the government needs to be cautious about is about depleting capital in this economy. Once you see or realize you're depleting capital for people, for production in this economy, then we're heading to the very red zone.
So what then needs to be done? Because for like you're talking about the farmers, the businesses and consumers, they just want to know what is being done so that I can be protected. As much as all these headwinds have been listed, from Russian invasion of Ukraine to, the pandemic, at the end of the day, you're seated at home, you're wondering, but what is my government doing in relation to that?
I think what needs to be done is that the history of economics talks about basic needs. That's why we have food, shelter, and such. So once you satisfy that, then you're able to support any inflationary cost, any measure that impact on the production of the economy. So the country needs to come back and look at social protection mechanisms. Which other projects can we do that have an immediate effect to these particular people? For example, we'll say we have enough tertiary institutions in this country. We have enough universities in this country. Perhaps we have enough roads that we can still service, that we can maintain in this country. What we need is projects that have immediate effect to the people. If, for example, we replace a road that's supposed to be done with a certain dam, other dams are supposed to be done. When you do this at the dam, farming starts immediately. So people can put food on their table immediately. People can sell food immediately. So we need projects that have anchored more on social protection. So that's where we are going to sustain ourselves. Because when the food basket is endangered, of course, we might be able to not sustain the economy on that inflationary trend.
All right. Yes. And for the International Monetary Fund, it has actually warned that it's going to get worse before it gets better. And the Federal Reserve says it's actually positioning more rate hikes going into December. Also in Kenya, we do expect the central bank to continue acting even as it tries to rein in on inflation numbers. So what else can you expect on an outlook basis? Also, bearing in mind that elections a month now away.
I think what the government needs to do, I will forget about the USDs and the Euro international currencies, is to push as much money to the people. If the CBR rate can be reduced, I think it might be mentioned as a political decision, but we need to push money to the people. So we need to pump our monetary policy.
Inflation is gonna go off the roof.
No, inflation does not go high by the virtue that you give people money, because there's a control mechanism. If, for example, I'm able to borrow cheaply at a certain commercial bank, then what it means in this, I'm going to borrow to do a certain business, which this commercial bank has evaluated and has seen the economic benefit of that particular project. So I'm given money to go and do a specific business. It has a control mechanism. The only way that we can say we are releasing money that is not being monitored is a situation where we go say we are going to print money. That's on monetary policy. So monetary policy is anchored on specific items. One is moral suasion through commercial banks, whereby banks are told, let us lend to the people. Let us stop giving money through treasury bills and bond to the government. Because, for example, I'll give you a scenario. If a certain commercial bank has 15-point-something billion that they are supposed to lend to SMEs, then immediately a treasury bill and bond is floated of 14 billion shillings. Why would the commercial bank give public this money? And I know they are going to default at some point because the economy is hard. You better give the government. So when you give the government, you have denied thousands of people who could have taken this loan to go and invest. That's the situation we are talking about. The money must be challenged to the people, and then of course there are frameworks to control inflation. Yes.
All right. So the frameworks here, the frameworks now for controlling inflation. Yes. What will that be in such a scenario?
Such a scenario would be that, and I want to give you initiative that the government has done. we have a credit guarantee system that has said for any commercial bank to give money to SMEs, then in case they default, we have a credit guarantee system that is going to take care of that. But before the credit guarantee system comes in, then the commercial banks have to ensure that the money has been used rightly for the correct purpose and for this venture. The other aspect that for specific items, goods, that when you talk about inflation in this country, there are certain parameters that are used to measure inflation. One is our food basket. The biggest contribution is unga by default. Because you don't say that we take chapati a lot, no? You don't say that because you use watches, the more how you consume watches will determine our inflation. No? Unga is the key item that determines our inflation, for example. So why don't we have a subsidy on those particular specific products that have direct effect on our inflation? Because what is happening is this: as long as we are going to deplete this capital, we are going to increase the the cost of fuel, we increase cost of production. So when you increase cost of production, if you are producing 10 ungas as a company, then you will produce 5, because you don't have the mechanism to pump all these costs. So when you produce 5 and the consumers have remained 10, because the population is not reducing, so then you will realize instead of selling the 5 for you to get your profit, you will sell at 200 if you're selling at 100. So that is the system that is giving inflation. Then instead of allowing that to happen, why don't you subsidize this unga as a government?
More subsidies, David, more subsidies.
Yes. But specific items that have direct effect on our inflation index. Yes.
All right. So thank you so much for your input, David Kingo. Of course, he's an economist. He's been shedding light in relation to the hike in the U.S. interest rates that we witnessed yesterday, and at the same time giving a snap overview when it comes to the Kenyan economy. It was so lovely having you on Business Cafe. I've been your host, Brenda Kerubo.